Welcome to Buy, Hold, Sell. My name's James Marley, and today I'm joined by Prasad Patkar from Platypus and David Wilson from Colonial First State Global Asset Management. 2017 was a tough year for telcos. In fact, they were the worst performing sector on the ASX, and 2018 hasn't started much better. To help us understand what's taking place in this sector and when we might be able to make a buck, these gentlemen are going to help me navigate this conversation. Prasad, I'll start for you. Give me the base case, what we're looking at with the telcos. Why has it been so tough? We're using more data. We've all got our phones. Why aren't they making money?
Well, the competitive intensity in the sector has gone up markedly. The NBN has been a structural change in the industry. So that's introduced a lot of competitors and has made the market accessible to these new upcoming competitors into the market. Telstra had a easy run on the mobile segment of the market for a couple of years, a cozy oligopoly, and the competitors were not up to scratch. That has ended now with TPG entering that fray as well, and Optus and Vodafone have gotten their act together as well. So overall, competitive intensity has gone up. The capital intensity has gone up. To your point about data intensity rising. So overall, it's been a squeeze from all directions for the telcos, and it's been pretty tough.
Okay, so competition, capital intensity. David, anything to add to that?
I think some of the participants, you shouldn't underestimate them. I think you take the likes of Optus under Alan Liu. The guy has got a long background in the industry, and Optus has shown themselves to be a really consistent competitor, aggressive competitor in the mobile market. And with the NBN opportunity, you've seen them actually move into the broadband market as well. Similarly, you've got TPG who are sort of readying themselves for a 2020 launch. And I think that's going to put real pressure, further pressure on the pricing in the industry.
Okay, so a lot of this information about the telcos, competition, intensity, we've known NBN, we've known for some time. Stocks continue to drift lower. Do you see a point where what would be a point where you start to see value in the listed players as a start?
I mean, obviously, price can be one of the answers to that, but in the absence of sort of major price movements, you need to see some of the sort of major changes take place in the industry. So you need to see Telstra perhaps become more targeted in terms of taking out cost and reducing its capex. You probably need to see Vocus sort of refocusing its business, maybe perhaps rationalising some of its assets as well. And the other one which sort of looms somewhere down the track is potentially if you saw TPG and Vodafone merge, which is not beyond the realms of possibility, then you would suddenly see some rationalisation in the industry.
Okay, interesting. Prasad, TPG, last time you were in, you told us one you needed to be patient for. It is the one that's investing really heavily, new mobile. What's progressing with that particular company in this space?
Look, not a lot has changed in that phase. I think if you're looking at investing in TPG, you'll have to take a 3-year view, and I think that is consistent. I agree entirely with what David said. It's the industry will rationalise at some point. In addition to what David said about consolidation, I think the other thing that can be a catalyst for the sector is a restructure of NBN Co. At some point, I think the government will work out that it's unviable in its current pricing form. The charges that NBN Co applies to its customers is just too high for anyone to make a real margin. So those charges will have to come down. The value of NBN Co on the balance sheet of the government will be written down, and that could be a big catalyst for the sector overall. But there's nothing imminent in that direction. It'll happen when it happens.
So that murky outlook and that lack of definition for a catalyst, is that why the prices are really continuing to drift? Is there just not enough clarity for investors at the moment?
Yeah, there's the issue of clarity. I agree with that, but there's an issue of lack of interest, and that lack of interest in the sector comes from the fact that this sector has virtually no earnings growth for the next couple of years. So people find better or other things to do with their capital rather than invest and take a very long-term view. These things do go in long cycles. There will be a restructure of NBN Co at some point. There will be sector consolidation as well, and margins will find a floor. So until that sort of clarity emerges, like you say, it's going to be a pretty tough going for investors in that sector.
All right. Well, let's get down to a little more granular detail. The stocks have been drifting at a valuation level. Telstra is down around the low 3s at the moment. 10% grossed up yield. Is there a point, Dave, where these valuations start to look attractive factoring in that there's a bit of uncertainty and that could create the opportunity?
I think that's an issue, but I still think you need to see further digestion of bad news in Telstra. There's a potential dividend cut, and we'd like to see CapEx across the sector sort of roll back. So you see it in other sectors, say casinos or resources, where you have these periods of heavy CapEx, and it's actually quite hard for the stocks to perform in that sort of period. So with Telstra and the others, you've still got the upcoming spectrum auctions as well at the end of this year and into next year. And again, that's a sort of further sort of burden, cash flow drain for the industry.
Okay, I'm going to push you for one.
Yep.
If you had to, and tell us if you don't think you can, but if you had to pick a telco that you think looks like it presents an attractive opportunity, could you pitch one to us?
Yes, our choice would be TPG. We think they've got a longer term strategy. They've got a cost structure and a sort of a CapEx positioning, particularly in light of the Vodafone contract they have in place, that actually positions them for that sort of competition that we're going to continue to see for the next sort of 3 to 5 years.
Alrighty, Prasad, I've got a suspicion you might give me the same answer.
I agree. I mean, if I had to pick one counter in that space, I would definitely back TPG. But again, take a patient 3-year view on the investment. I mean, Telstra doesn't look too bad between $2.50 and $3. I think the way to look at Telstra would be to remove all the NBN payments out of your numbers and see what the sustainable dividend is just based on organic cash generation. And there's a bit of there's a bit of debate in the market about what that number might be, and it could, my feeling is it'd be somewhere between 15 and 18 cents. So that's where I get my $2.50 or $3 for Telstra. Again, it's one for the income investor, there's one for the patient investor, and unfortunately for David and I, growth investors, there's not a lot in that sector at the moment.
Absolutely. Well, they're a bit cheaper than they were at the end of last year, but it doesn't sound like they're quite cheap enough for our growth investors here today.